RP here. We are recording video on 20th February 2022. So I'll keep this video short and script and I'll try to cover the levels for next week. So let's discuss the levels for next week with price action and indicators. So here we can see that Nifty has formed one of the bearish pattern, but this is not a textbook example here. So you can add your comments and tell me which bearish pattern is this. So this pattern can be a signal of a reversal. So you can let me know in the comments. I will add a heart sign and a reply to the comment which tells me which bearish reversal candlestick pattern is this. Okay, so yeah, I see one bearish pattern here, but this is 13 EMA. Price has not closed below this yet, and this candle does not have a good body. So there is a doubt on this pattern, or you could say it's not very clear that the trend has changed or not. Other things that confuse you more will be RSI, which is above 50, considered as a bullish signal, or you could say above 50 RSI means there is a chance of upside. Here Aron indicator has went sideways. We discussed last week that Aron might turn like this, and then in the end it could go like this. So this would again turn bearish. That is one view that we discussed. But right now it's going sideways and there is a no good trend here. You can see from this date of 10th of February, since last 20 days, or you could say 20 calendar days, we do not have a good trend. Nifty is moving sideways. So currently the market is sideways as per Aron. RSI shows us it's at the boundary level to be bullish, and price pattern does not conclude anything because candlesticks shows that price is still trading above 13 EMA. So it means that it can again break 48 EMA and can move higher. The 13 EMA line has crossed long-term moving average 100 EMA, or you could say they are at same level right now. So next session is important to decide whether it will go up or down. So if in next session again Nifty manages to close above 18,000, then there is a chance to head further higher towards this resistance of 18,200 to 300 in next couple of days, or you could say in the coming week, coming 5 sessions of the week. So that's all on indicator front. On Elliott Wave, we talked about these charts. So this was one of the chart that we talked. So this chart is still true. The price went below a little. So B wave went still below some points towards 17,700, then gave an up move. So this pattern is still valid with W, X and Y wave in progress. We are expecting here Nifty to head towards 18,170 to 370 levels on the upside. Max upside possible has been shown by Fibonacci extension with 1, 2 and 3. Okay, so when you plot like this Fibonacci extension, you get these numbers. So Y wave can head towards these levels. So it went very close to this. Nifty made top near 18,170. So yeah, it went very close to that, then corrected, and there could be a chance of further rise as well. So this chart is changed a little. I will show you the modified version of this chart. So this is the chart after the last week's move. We expected a more drop towards this low as expanded flat correction, but it reversed from here 17,720 odd levels. So there is a chance that this is A wave, this is B wave, and wave C could have completed here and we could already have started the drop. So one thing I want to wait for is break of this 17,853. Okay, this is the low that we want to wait for, break of this, because 2 sessions Nifty dropped but it did not break this low, which is okay. So this is the bullish candle. It opened a gap up and closed that gap on that day. So if it would have broken this low on the same day itself, then the reversal would have been confirmed. Or if second candle broken that low, then also there was a chance that we could consider it to be a bearish. So in next session, if it again breaks this low, then it will be 3 black crows and a reversal pattern, then I can consider that with this as a stop loss, we can consider that Nifty is still going to go lower and make a new low below 17,000. So this is the pattern that we consider here. If Nifty breaks 17,853, I would consider the bearish move start. If it doesn't break that and starts the pullback, there is a chance that our wave count here is going wrong. This could be something else. So here also there are doubts. This X wave and this B wave look to be equal in the time. So the number of bars taken by X wave is equal to number of bars taken by B wave. So there are doubts whether this wave count is correct or not. So it could not be a WXY, then it could be something else. Okay, so yeah, that's confusing, but don't get confused here. You need to remember this number 17,853. If it breaks this, then there is a chance of drop, and MACD is not making any negative divergence on hourly chart or 15-minute chart. So we should be considering one more high possible towards upside 18,300. So you can see here the price on Friday's drop didn't went below 0.6 Fibonacci of last swings. Okay, so there is a chance that tomorrow in tomorrow's session Nifty could open gap up and continue the gap, break this, come down like this, retrace, and then go up. So this is one of the way I can think of based on Elliott Wave. Apart from that, you can see here there is no negative divergence on 15-minute chart. So this 15-minute chart, here we do not have divergence. Yes, of course, if there are no divergence as well, then also there is a chance of fall, but I doubt that because here I do not see Nifty breaking 0.6 Fibonacci. So it's important to break 17,853 low. If it breaks that, then there is a chance that our wave count ended here as Y wave, and we could have started the first drop going towards 17,000. So this is one of the case. Another case was like this. Okay, second case was like this. We assume this wave A as a leading diagonal structure with 1, 2, 3, 4, and 5. This pattern is little bit forced, so I can assume ABC here. The C ended near 17,700 and it did not go beyond this point. So we were not able to correctly forecast the moves in a last week's daily Nifty analysis video. But that's fine, that happens. So we need to understand more wave patterns, or in consolidation, it's very difficult to give the proper wave count. So this is still valid. Here we can consider that wave count similarly. Okay, so the same wave count here I have considered A wave. It could be a leading diagonal structure. It has a complex wave count, so this can be 3 wave structure. And then this is B wave. Okay, this looks to be an expanded flat correction as a B wave, and wave C is in progress. So out of C wave, what I'm assuming is Nifty could go max towards 0.32 Fibonacci or 18,470 to 18,600 as well. So in that case, there is a two possibility here. It can make a ending diagonal structure like this, okay, like this, and then could start the dip. Okay, so this is the one of the way that I think of, and this could have a good chance because we see here it looks to be a 3-wave structure. Someone can also label this as a 5-wave structure, 1, 2, 3, 4, and 5. But yeah, that's up to individual who can label the wave count. For me, this could be an ending diagonal structure ending towards max 18,270 to 18,300. From here, we could see a dip, and slowly we will move in this ending diagonal pattern. Maybe 2 to 3 sessions will spent in completing this wave pattern, and then we could have the drop. So this is a rising wedge, and it could be an ending diagonal pattern as well. So this forms at the bottom of the trend, sorry, at the top of the trend. Okay, and from there a significant correction completes or starts, and then we can see this is the reversal pattern for us. We need to wait for it. So tomorrow if it opens gap up, then there is a chance that it will move like this. Okay, it will move like this on the upside. So first move it can make towards is 18,200 to 270 levels, and from there we can have a smaller fourth wave drop then again we'll have ABC final wave. So this fifth wave must be smaller than third wave, then only this pattern will be valid, otherwise it's an invalid pattern. So that's all on the Elliott wave front. Hope you understand. We need to wait for 17,853 break to confirm that the wave count has completed here and we could have started the drop on the downside. So in this case, there could be a 3 black cross pattern as well. The second chart that we discussed is like this. It can be a zigzag correction with A completed here, B completed here, and wave C is in progress. It can make an ending diagonal structure until it does not break again 17,853. So here also we need to wait for price to come out of this trend channel. Okay, so this yellow channel, the price needs to come out of that channel, then only we can consider that there is a chance of dip. Also look for the break of previous low. So this is the significant previous low 17,853, that is not yet broken, so I doubt there is a further drop possible in Nifty. It could trick us in next 1 or 2 days. It's very important to note down the Nifty's move. So 18,000 cross again can mean that Nifty will again head towards 18,200 with a short covering rally. Do remember that Nifty will move in a zigzag fashion if this pattern comes true, and it will be 3 wave structures. So that's all on the Elliott wave front as well. We'll check the option chain. In last week option chain, we accurately identified if Nifty breaks above 17,000, if Nifty breaks below 17,800, it can go towards 17,700, 600. It went max towards 17,700, then started the pullback. The second chart, the second way that we mentioned, if it breaks 18,000, then it can move towards 18,100. So similarly, Nifty moved. It didn't go exactly as we forecasted, but yeah, so there are some clues that are left on the option chain as well. So first clue is look for the biggest number on call side. So this is call open interest, which is 118 lakh on 18,000 strike. This means this has biggest resistance as of now, and biggest support, where is that? So biggest support, actually it looks at 17,500 right now, but 18,000 is also a big support. Here you can see 69 lakh put open interest open. So there is a chance that both of these can act as a support. So next day's move will decide if this number will increase or decrease. If this number increases, this means the market will go up. Okay, and if this number decreases, then the market will fall down. So second point of support is at 17,800. So this is the second support for this expiry. On resistance side, the second resistance is at 18,100. Okay, 18,100. 18,300 is very close. Okay, 18,500 is far away right now. So 18,100 to 17,000. 18,100 to 18,000. This is very tight range for us right now. So tomorrow's session will change these numbers. So it's better to assume those numbers like 18,000 to 18,500. Okay, forget these numbers. So as per the numbers, if you go, 18,000 here is the biggest number, and 18,500 after 18,000. Okay, because this is on same strike, we have highest call open interest. If these guys run away in tomorrow's session, then it will definitely head higher, minimum towards 18,200, 300. And on flip side, the biggest support, second biggest support is 18,500. So for this expiry, 18,000 to 18,500 is range. Okay, this is what I see from the option chain. And yeah, so that's all. Hope you understand the analysis. You can watch video again and hit like and subscribe. It was not easy to create today's video because I was busy in personal work. So still I created it to help you explain the moves. This may not be a detailed study like I do for every weekly analysis, but I try to cover all the scenarios for next week. So be careful next week. Yeah, it could be a trick that the market has started the fall, but it could reverse, as I can see from multiple indicators and multiple methods that I use. So that's all. See you in next video. Thanks for watching. Bye bye.